Hello, chart watchers and Decision Point faithful. Welcome to this, well, it's Wednesday for us right now, but you're seeing this on Thursday, April 23rd. Decision Point show with your hosts, Carl and Erin Swenlin. For those of you joining us for the first time, we definitely welcome you to the show and hope to see you back. And let's take a look at what we're going to talk about in our agenda today. How are you doing, Dad?
Pretty good.
Pretty good, pretty good. It's so strange. You're so close, yet I haven't seen you in forever.
Right. I got a COVID-19 haircut yesterday. I got my new hair clippers came in the mail, and I'm totally buzzed.
I'm sure Mom loves it.
Oh yeah,
She
that's
never.
another story.
Yeah, I'm sure it is. Yes, I'm ready for my hairdressing appointment. That's for sure. But I did get lucky because I had it done right before we went into shutdown mode. So
Yeah.
of course it doesn't matter. Nobody's really been around to see it. So. All right, we got lots to cover today. We're going to talk about earnings. Earnings numbers have come in. We'll, of course, start with the market overview. I'm going to go through some of the Decision Point diamonds in the rough. We had some pullbacks yesterday, and I wanted to highlight some of the stocks that I looked at yesterday in preparation for a possible move to the upside today, which happened. So I, of course, want to show you some of those charts and how to get in when you're seeing things look the right way. Questions, we're going to finish. We found some questions, comments from our YouTube video comments on our show. So we were going to look at a couple of those questions and answer them for you. So feel free, if you want to send questions to Decision Point, just email support@decisionpoint.com. All right, well, let's go ahead and get started with that market overview. I'm going to pass it to you to go ahead and just start looking at some of those charts.
Oh, okay. We can do that.
Yep.
All right.
Yes, the 5-month candle. I was on your daily 5 today, Wednesday, and that was one of the charts I, of course, showed. was our 5-month candle chart. So
Right.
lots to talk about here.
Yeah, we've been watching a rising wedge on this, and of course, yesterday it broke down from that wedge, and today it bounced back up to the line. So, I have to say right now, something I meant to mention is over in this area, while we were here, it was like every time we get a down day, you'd get very little follow through. And if it looked like it was really going to be a heavy down day, it would turn out not to be. There's just always that reservation for the market to go down. And I'm just getting the same feeling now.
Mm-hmm.
There's just a more bullish action. Do you feel what
I absolutely agree. It held that 20-day EMA. And I'm not going to say I was surprised today when I opened up and saw that the market was on its way up strongly, in fact, because our indicators, which I wrote about yesterday, really weren't showing that. But you can definitely, there's been a bullish bias despite the 50-day being so far below that 200-day EMA. And as far as traders are concerned, absolutely.
On Monday, the market was down like 3%, but I just felt like it ought to have gone down more than that, and yet it didn't.
And yesterday, with the drop in oil,
yeah,
I would have expected a much deeper decline.
I don't know that people are responding to that, the oil issue.
Clearly not.
Yeah, well, one of the issues, the issue is really there's no place to put it. And if you receive the oil, well, you have no place to receive it to. And they're spending $150,000 a day leaving it on these tankers out in the ocean. So
Disaster.
anyway, we're still getting pretty solid volume, uh, although it's definitely uh, contracted from what it was before, going into the bottom there in March.
Yeah, and I know we don't follow the SPY volume quite as much, but I did notice today it was below that annual EMA for the first time since this whole bear market thing started. So
Okay.
I think that's kind of interesting. We'll see if we get some follow through.
The PMO is actually overbought. It's right on the zero line, but based on the range here, it's getting overbought. This would probably be what you would consider to be overbought. And it should be noted that the normal range here is +2 to -2. You got all the way down to -8.
Yeah, very deep.
While we're here, we got a question on how to set up the VIX with a log scale inverted. And there we are. Here we have it. You have these on the indicators, you set up price and then put in a minus sign, $VIX, comma, log. And
Yep. So if you put that minus sign in front of any of the prices, it will flip the chart completely upside down for you.
right. And we also add Bollinger Bands, and this parameters are 2, 20.
Mm-hmm.
So let's go on to the next.
And for anybody who sees one of our charts online when you're reading a blog or any of those types of things, if you want indicators you're seeing on that chart, if you click on it, it'll bring that chart up on StockCharts.com. You can do exactly what Carl just did by moving down. You can see all of the setups for that chart. And if you open it immediately in an annotation tool, it will generally save those annotations for you as well.
Okay. We've got this zone of resistance, which finally stopped it momentarily, but we've rallied almost 32% from this March low. I'm going to cover every chart. Let me just move on to the Silver Cross, Golden Cross, and Bullish percent. Used to carry just silver and golden, but Bullish percent is just, it gives much better short-term reactions than the other two, especially when it's so washed out as much as it is. But right now, the silver cross is finally coming around. Get up about 17% with the 20 EMA above the 50 EMA. Golden cross still pretty well washed out. Well, wait a minute, 18%. Now that's not very good.
Certainly an improvement, but a lot further to go.
Climactic action. We had much more climactic downside action yesterday with the decline. Not so much here, and notice that volume was very thin in terms of net advanced decline.
Yeah, it was trying to read that chart yesterday. It's, I saw those in additional negative readings, and my first call out would be, continuation of that initiation that we saw. But instead, it looked like it turns out it's a selling exhaustion.
Right. We get no readings here because we're not near new highs in the market. We're not near new lows either. So it's kind of uninteresting. It's not participating right now. short-term indicators, I really think this is a pretty good chart for short-term um, investigation, shall we say.
Mm-hmm.
Notice that here we had this red line marking a market top, and prior to that, notice that the STOB, S2V stocks above 20 EMA was dropping ahead of that. So that was kind of a good warning that we had a top coming, short term, of course.
Mm-hmm. I see they're ticking up. I mean, I think that's a positive sign, but I usually like to see a little bit more out of it than just a tick
Right.
to the upside. And then also, I never got a chance to talk to you about it, but the percent PMO rising for a day or two there was at 100%. Have you ever seen that reading? I mean, I looked back in time quite a few years and I could never find where you had every single stock in the S&P 500 with a rising PMO.
Um, that's very high, that's for sure. And it's very high that it's very long period of time for it to persist at that level. So
Yeah.
I don't recall, um, I don't recall
So we
seeing
did
that
see that
before.
as well as those Swenlin trading oscillators were starting to turn down. We also had those extraordinarily high overbought readings.
Intermediate term indicators, well, topped. ITBM is turned up again. Um,
Yeah, I mean, I usually don't get overly concerned until we get a crossover one way or the other. Um, and, you know, they're already trying to decelerate with today's move, but of
right.
course it was a 2+% move to the upside.
Here we are at zero, roughly zero for these, all three of these indicators. Um, that would be in a normal day, would consider to be normal, neutral, but it's moved up so much that you have to think this is this is kind of an overbought situation in this case. Once again, notice that on these intermediate term indicators, before the all-time high in the market, these indicators were falling, and also that was a good warning of a decline. Of course, there's no way to tell it was going to be as heavy duty as what we
Yeah,
got.
I think that surprised all of us.
Okay, that covers that. Let me cover the earnings while I'm here.
Okay.
Okay. Um, got another earnings spreadsheet from S&P, and they are 14.3% of the stocks in the S&P 500 have reported earnings so far. I shouldn't have gone to this one first. And what I noticed today is that all these shifted way down. You can see there's a definite drop in the projected earnings out for the fourth quarter of this year. And whereas this hash mark was up here last week, it's starting to drop. As I said, we're liable to get something that looks like this, to where the range of these is just irrelevant in terms of what is likely to happen with the price.
Mm-hmm.
And we got a question on, I might as well cover that while I'm here.
Sure.
Wanted to know how to get the PE. What is the S&P PE? You could, I won't go into how you calculate it, but let's see. Here we go. You get a price, and then the symbol for the S&P PE is exclamation PE SPX. And while we're at it, if you want to know earnings, it's exclamation GAAP SPX, and the dividend is exclamation DIV SPX. We have also for yield, and I also put a payout ratio. And that should always be below 1, and it's even better when it's closer to 0 than 1. Okay, did you want to take it back?
I will take it back. So I've been working in a trading room with Mary Ellen McGonigal on Tuesday and Thursday mornings. If you're a subscriber to DecisionPoint, or if you're on our free email list, you'll get a link the night before, so Monday and Wednesday nights, with the link to our live trading room. And we talk about some of the stocks that are interesting to us. We take symbol requests. And as part of it, I've started to really look, at the bear market, and the advice we have as far as a bear market rule is that you need to really be managing your investments in the short term. It's not usually what I do. I'm much more of an intermediate term to long-term investor, but in order to make my money work right now and to also give my viewers and readers what they want with the DecisionPoint diamonds, I've become more nimble, and I am sharing my experience and what I'm seeing so far. But I wanted to look at gold miners really quick, because in yesterday's DPA, our Decision Point Alert, I did note that we were seeing a flag formation here on gold miners, and the expectation, of course, would be an upside breakout. Well, I didn't expect a 6% plus upside breakout, but that is a really great example, I would say, of a breakaway gap, and it's happening on the top of this flag formation. So gold miners are looking pretty good. The only thing that I would be a little bit concerned about at this point is that the PMO is very overbought. Currently, it's accelerating. It's not showing any deterioration, but that will be something to pay attention to. If it starts to curl, that might be the time to take some of your profits out. But you can see that as far as the RSI is concerned, price really isn't that overbought right now. So it still has room to move higher. But that's my biggest problem with it, is a possible overbought situation here for the PMO. But you can see the others are looking pretty good here. So
my guess is that if you look back in time on the GDX, the PMO will have a wider range than what we see in this 2-year period.
And the easy way to check that out, folks, is you just change your range, and you can sort of see where the PMO tends to land. And yes, you can see we've had some of these readings down into the -10 area to the +10 area. So good catch, because that makes it even a little bit more attractive to me. So anyway, my diamonds report yesterday, I talked about a few pullbacks to take advantage of. And one of the ways you can do that is, one, you add them to your watch list when they have a down day, and keep an eye on them by using the 30-minute chart. That's how I've figured out, for me anyway, the best way to get in to a stock, and is to just zero down into that 30-minute, even a 5-minute chart if that's your style, and that will help you a lot. So the day before, I had talked about Costco, not yesterday, but the day before, on Monday, about the fact that it was pulling back and it was starting to look good. Well, of course, then it had a very ugly day yesterday. But I wanted to point out that had you been looking at it, so I talked about it Monday, and if you were looking to get in Tuesday, yesterday, and you watched the 30-minute chart, there's no way you would have jumped in. Even when we started to get that bounce on that 30-minute chart, the momentum was still moving downward. So no entry, no good entry. But now if we look at Costco, as of yesterday, or as of today, of course, we had a 2.5% plus move to the upside, and you've got the PMO now ticking up. So there's some good stuff happening on this chart now. But what would you have done if you were interested in getting in it say today. So if you were watching it today, here's my 30-minute chart for Costco. Look at the difference. So we opened higher, but the PMO is still flat. But as soon as it started to climb, that's when that PMO started to move up, and then you got your buy signal right here. And that would have been your best bet as far as an entry by just using the PMO and that 30-minute chart. So that's one of the things that I recommend, that I'm learning, as I said, in that trading room. And I invite you again to sign up on our email list, our free email list. The trading room is free, and come check it out with Mary Ellen and I. Here are two others that I mentioned in diamonds yesterday. One was Adverum Biotechnology. And I talked about, again, having a nice pullback that might give us an opportunity to enter. And of course, it was up over 1%. But the question is, would that 30-minute chart have gotten us in today or not? And the answer is no. So there is still a moment in time that is left if you wanted to start looking at that as a possibility, because we still are looking at this pullback. It has not gone below this confirmation line for the double bottom. And the double bottom, I really don't think has disintegrated just yet, because it's still, if you look in the thumbnail, we're still in a rising trend. It hasn't really broken down from that trend. So I think there's still some opportunity possibly here. The PMO is rising. I believe the weekly chart on this one looked pretty good as well. We've got that PMO turning up. The question is now if it can get up to those tops there on that weekly chart. Other one was Dexcom, and I talked about this chart this morning on the Your Daily 5. And again, it was one that I had pointed out. This was on my diamonds yesterday because it had that very big pullback. You can see came down to that 5-day EMA, pretty much just touched right on it, but it hadn't dropped below this area of support. So we had gotten the breakout, we got the pullback. I mean, that's exactly how you want to get into a stock. You want to see the breakout and then expect the pullback. Sometimes they don't pull back. Well, then you have to evaluate on your 30-minute chart whether you still want to get in it. But typically you want to look for that breakout and see the pullback. And so we did get the breakout. I saw the pullback come in yesterday and put it in the diamonds report. Of course, we're up 3+%. I can't guess that they're going to be that wildly successful, but I think there's still a lot of upside potential here for Dexcom, because you do have this flag that executed on that breakout. And again, I don't think that it's disappeared yet. You still can see a pretty good rising trend here on it. PMO is not overbought. OBV is going the right way. RSI, I think this is excellent, is the fact that it's trending up, but it's really, even though we're sitting at these highs, overall, the RSI is showing that price isn't that overbought. It still could rise. And looking at the 30-minute chart, just to get a feel for what might have happened. So you could see that as of yesterday, it had just started to turn up. The PMO had just started to turn up. So it was starting to turn as we were getting that momentum to the upside today. So an entry anywhere in here would have been, it would have made sense. You were seeing that momentum go the right way. And you can even see the on balance volume was starting to trend up as well. So that was that one, and I think those were the ones I wanted to show. But diamonds, I do them Monday, Tuesdays, and Thursdays. Thursdays, I even take some reader requests, so you can send me those. But if you haven't checked them out, I recommend you do. They're not all winners. I pull them out. They're for educational purposes only. I don't keep track of this. I don't curate a portfolio. The service is $25 a month. I don't have, I'm not gonna be curating a model portfolio for you for $25 a month. So, but I do, 95% of the stocks in my portfolio come from diamonds. So you're seeing what I do, you're seeing what I look at, and my portfolio is doing all right. So, anyway, that's all I had with that. Did you want to do, I think we still had some questions that we could talk about. We have about 5 minutes.
Yeah, okay. Here's one. It's simply stunning that the U.S. economy can simply collapse that people don't buy unnecessary stuff, eat fast food, cruise, and fly for 4 weeks. It's somewhat of a house of cards, isn't it? When we come out of this, there has to be some sort of structural reform. Otherwise, it's too fragile and focused on leisure and shopping. The marketplace will definitely sort out a lot of these big problems. I've thought a lot about this since we've been in this difficulty for the last couple of months. And what I've come up with is everything depends on everything. There are a lot of, Erin, your mother likes to watch the Balkans, and I have watched it. I don't watch it now, but
what show?
The Waltons.
Oh yes.
And
I
it was
remember that.
during the Depression, and boy, those people lived pretty spare back then.
Absolutely.
And yeah, I think we lavish a lot on ourselves, unfortunately, using debt to, getting too much debt to spend things that we don't need. But the fact is, you can't say that one thing is more important than another in terms of how the economy is running. These cruise ship lines, they're generating income for their employees. The movie theaters could use less of them, in my opinion, but guess what? A lot of people depend on the income that they make from from people going to the theater. Naturally, the entertainment industry generates lots of income for people that work in that industry, and they spend it, and it goes out to other people, and shall we say, more essential industries like, say, Home Depot, that kind of thing. But it's just you really can't sit here and say, well, what should we cut out? People should not spend as much money. When they come out of this, maybe they won't get so much in the debt, and that would be a good thing.
Absolutely. Yeah, and a lot of people ask me too, my friends are questioning me about, the future. I wish I had a crystal ball, but I don't. But what I told them is really, it's so complex. So, I mean, your everything depends on everything is right on. It's so complex. Everything is, we have fingers of one thing. Look at Amazon. They've got their fingers in everything, and they depend on oil. They depend on the shipping. They depend on the vendors. They depend on us, the consumers, from consumer staples that they sell to the consumer discretionary. And, it's not going to be an easy fix. And I agree that a lot of my friends have been talking about it as well, is that if anything, this has shown all of us that we really want to conserve more and watch debt, because those are the things that are going to get you into trouble when these crazy things like this happen. And the recycling and saving on everything, I think we're going to see a lot of that. And then the other problem, of course, is what the heck is going to be the unemployment rate, and that, people don't have jobs, they can't support an economy. So
yeah, I trust that the people in this economy, in this country, will bring it back faster than people would think. But there's really a lot of things to overcome now, unfortunately.
Absolutely. Well, that pretty much does it for our show. I do want to thank everybody for being with us today. Hope you're safe and healthy. We air now on Thursday mornings, so be sure and check that StockCharts TV menu out. Happy trading.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.